Happy Monday, traders. Welcome back. I hope everyone is well. So, I'm just going to give you guys an update on BTC. If you recall, last week, I posted a top-down analysis on BTC explaining all the reasons why I was monitoring this 4-hour level of supply for potential moves to the downside. Now, I did get triggered into a trade, so let's just talk about that very quickly. If we go down to the lower time frames, on the hourly time frame, you can see since this market structure shift, which is what we were explaining in last week's update, we've got a bearish market structure shift. You can see we swept this high right here, removed the buy side liquidity, and then shifted structure. So I was monitoring, as I said, this area of supply for potential moves to the downside. Now, inside of the supply zone, we've got a micro market structure shift. The market here broke structure, come back up, retested the 50%, and started to move to the downside. This was my entry. Okay, the market started to move to the downside. The market perfectly filled in that imbalance there, spiked into that imbalance, rejected it quite aggressively. Ever since rejecting that imbalance, what I did, I moved my stop loss to entry, right? Risk management, risk mitigation is one of the most important factors to profitability. So I moved my stop loss to entry here as the market rejected this fair value gap. Then the market started to consolidate in the form of the wedge. The wedge for me was my first indication that we are potentially going to see higher prices. When the market begins to consolidate like this below a level of resistance, the level of resistance being exactly this high, there is a very high probability that the market will break to the upside. Why does the market break to the upside? Because we need to grab the liquidity that was remaining above this high. We need to induce enough buyers into the market to open trades in the opposite direction that the market wants to move. And then there is enough liquidity to the downside for the market to then move into the buyer's stop losses. Okay. So the wedge formation was my first indication that we are potentially going to break higher. So that trade ended up hitting my break even. So it's time for an update for you guys. What we're going to do now, we're going to go back to the higher time frames, and I'm just going to clean my chart, right? If you clean your chart, it gives you a fresh perspective. Everyone has their bias. Everyone has done their analysis. When you're focusing on one single perspective of the market, right, this can lead you to disregard some other key factors, some key price action that we are maybe disregarding, not looking at. So let's now go to the monthly. We go to the monthly time frame. This is something we've spoken about a number of times. We have previous support here, broke to the downside with a bearish impulse. We are retesting, very simply put, previous support turned resistance. Now here we spoke about Bitcoin when it was here, how we expected this bullish engulfing candle to be a trap. We got this bearish engulfing off the level of resistance. This induced sellers into the market. Then we got the bullish engulfing, which removed the liquidity of the sellers and it induced buyers. Ever since buyers were heavily induced with this fake move to the upside from this monthly candle, we got this bearish break back down. So here from a monthly perspective, we are bearish, right? We have broken structure to the downside. We have a left shoulder ahead and a right shoulder. We have a bearish impulse correction continuation pattern here from a monthly perspective. Not only that, but we have this level of unmitigated demand all the way down at between 9 and 12k, and that is my overall downside target for this bear run. I definitely think we are going to at least hit these prices during this bearish cycle. If we now take our Fibonacci from the high to the low of the monthly impulsive move, which broke below that horizontal level of support here, you can see that we perfectly made the impulse, we made the correction, we spiked into the 50%, and we started to make the move to the downside. Now, if you take your Fibonacci from the high, sorry, I have a tickly throat this morning, from the high to the low of the corrective move, the minus 0.272 is the downside target according to the Fibonacci for a next swing low. And look how perfectly that Fibonacci target lines up with this order block, right? It lines up exactly at the 50% of this unmitigated monthly demand zone, which gives us more confidence to expect the market to get attracted into that level. Now, if we drop down to the weekly time frame, what we can see from a weekly perspective is right now we are still bullish, right? In regards to the counter trend. The overall trend is bearish, very much bearish, right? Let's not get that twisted. Ever since the market swept that buy side liquidity here, right, we have been bearish, right? This is exactly where the bear market started, and we are still in a bear market. As I said, we are testing this horizontal level of structure, previous support, 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 broke to the downside, resistance, okay, and we are retesting that zone. However, during this corrective move, this corrective counter trend, we are still bullish. Why are we still bullish? Because we have the high, the low, sorry, the higher low, the higher low, the equal low, right? At the moment, we have made an equal low. However, we have made equal highs. We failed to make a higher high. And we've made the equal high. So this is an indication that price is getting exhausted. Okay, and I do think now that the market has reacted from 25k support exactly here, created this double bottom, equal lows area of liquidity, I think the market is going to be ready to make that move to the downside. So we had a break even trade, but I have not changed my perspective. I believe the fact that we have now actually lifted off this support, we've just induced more and more liquidity to the downside. Okay, and what I'm going to do, I'm going to be looking for re-entries on the short. You can see from a weekly perspective, we have been consolidating for around 6 weeks here. This consolidation, we've just pushed to the upside with a bullish engulfing candle. Again, this is our trap formation. We have a shooting star here, which induced sellers. It induced sellers exactly off this descending trend line. Okay, you'll be able to see this more clearly on the daily time frame. We have a very nice, clean daily descending trend line here. We rejected that exactly with a shooting star. This induced sellers into the market. Then boom, bullish engulfing weekly candle, taking out the stop losses of sellers and inducing buyers. And I believe we're going to see a nice, strong bearish candle now into this equal low liquidity and into this imbalance that we've got on the lower time frames here. So now if we drop down to the daily, now what we can identify from a daily perspective, right, let's just zoom out. Let's draw in this trend line from a daily perspective. Now look at that. That's beautiful. We have one touch, two touch, three touch. Here the market started to consolidate, right? What are traders going to be doing? Retail traders. They are going to be looking at shorting that trend line. Where is their stop losses going to be? Above this high and above this high. Okay, so that's exactly why you just saw that very strong bullish candle. It's just a liquidity grab. It's nothing else. It is a liquidity grab to grab the stop losses of traders that are shorting this descending trend line. Not only that, but because the market has now broken that descending trend line to the upside, what a trader's going to be thinking here? Oh, Bitcoin's made the higher low and it's broken out of this descending trend line. Let's go long, right? Traders, they're going to be buying the retest of this area. And what is that going to create? It's going to create liquidity to the downside. And that is exactly what the market needs to make the move. It needs liquidity. So now I think the market is ready to make that move to the downside. What we can do is we drop down to the 4-hour time frame. I'm going to leave that descending trend line on because it is a manipulation trend line. What I mean by that is usually retail traders, they love to use trend lines when market structure is key. You can clearly see we are still bearish, right? We've broken no bearish structure whatsoever. We have the lower high, lower high, lower high, lower high. Okay, but the fact that we've broken out of this trend line has induced a mass amount of traders to open trades in the opposite direction. What we can also identify is this wedge, right? Look at this wedge. Now, I use these wedges over and over again for manipulations. They are retail traders' traps. You can clearly see here the market is consolidating in this perfect wedge, right? It was consolidating in that perfect wedge. Now, the market has broken that wedge to the upside. The market has broken the wedge to the upside. It's taken out the buy side liquidity above this high. It's taken out the buy side liquidity above the trend line. And we have just grabbed the buy side liquidity above the significant high of the wedge. Now, this is where we usually look to trade from once this high has been taken with this wedge strategy. So now on the 4-hour time frame, what we can also spot is we have 4-hour supply here, okay, that has not yet been mitigated just above this buy side liquidity. Okay, so overall, we're ready to short here, right? We are definitely ready to short. We could see a small spike above this high to really grab the liquidity there. Okay, so that's something that we have to be aware of. Is a small spike above this high to grab this liquidity. Now we're going to drop down to the lower time frames. On the lower time frames, right, you've got the buy side liquidity of that significant high here. We're going to go to the 30-minute. On the 30-minute, you can clearly see. So this is the macro trap. This is the micro trap. Macro, micro perspectives. We've got a macro wedge. We've broke to the upside, grabbed liquidity, induced buyers, and now we should break to the downside. On the micro perspective, we've got a micro wedge and exactly the same thing. Now, as I was saying, on the 30-minute and the 15-minute time frame, we're still bullish. This was the last 15-minute high low that pushed the market to the upside to create the sweep. Okay, so the market, as I said, could easily go for another higher high and really take out that buy side liquidity that we've got here with this blue line. If that happens, we are then waiting for a market structure shift and we are going to be shorting. Okay, just to conclude, overall, I think the sellers' stop losses have been removed. Buyers have heavily been induced into the market. There is a huge amount of liquidity and area of imbalance to target here from a daily and 4-hour perspective. The first level of imbalance that will be my target is exactly here. Is that level of 4-hour fair value, which is below that ascending trend line, which is where the liquidity is. Okay, so what we need to see, we need to either see a deeper sweep of this high, so a bigger sweep of this high, maybe a tap into that order block that we've got exactly here. Okay, and then we need to see a shift in market structure. If we don't see a deeper sweep and the market just wants to melt from here, which is very much possible, how I'll be taking an entry again, I need to see a confirmation. How do I want to see a confirmation? I need to see the lower time frames aligning with everything that I've just projected from a higher time frame perspective. And how we can do that is wait to see a shift in structure. This is the last 15-minute high low that pushed the market to the upside. If we break below that low, I would be looking for an entry on the retest of the supply zone, which creates the bearish market structure shift. So that's it from me, guys. Very much focusing on Bitcoin this week because risk assets, US dollar, gold, sorry, not US dollar, US 30, gold, have been very bearish, right? They've been moving to the downside very aggressively off the back of FOMC last week. So I do think BTC is going to follow risk assets. It's just at the moment grabbing liquidity, okay? US dollar greenback has been very bullish, so that fits in nicely with the fundamental perspectives of this analysis. I hope you enjoyed the video, guys. I hope none of you had a losing position based on my previous analysis. Remember, always manage risk. When the market moves in a certain amount of profit, it's always good to then move your stop loss to break even. If you get taken out of break even, you can reassess the situation. So that's exactly what I've done. I hope you enjoyed the analysis, guys. I'll speak to you later. Take care.